line already, and right now I'm in cash, so I'm coming back into the market. So I'm not going to say, well, I got X amount of profits to work with, and I'm going to start risking that. No, this sort of starts all over again because now there's not many setups. I've gotten maybe knocked out of some names. The last couple of months have been difficult. So now I start that whole process all over again from that new level. Like I said, always thinking risk reward. Remember, we talked about the power factor where, as you're moving yourself up and you're making these profits, you want to start protecting from that new level and thinking risk reward from that new level. And this is about as key as it can get for not only making big returns and compounding, but and because the main thing is to keep yourself from having big drawdowns and losing your principal and giving back big portions of your profits. So
Yeah, I think that's important, really important point, Mark. Your idea of, not getting sloppy when things are good, because that is definitely, a temptation. I think a lot of folks, you're running with open profits and you think, wow, I'm just playing with house money. And that you don't really take that attitude. Well, you don't take that attitude at all. Neither do I.
no. TH is moving up here about 6% now. So this this came up from this little pullback buy, which actually triggered on Friday, and it's now following through a bit here. So again, this is one. Could have bought. You could have even started buying this on Friday, and then of course you can see it squatted a bit. It didn't really take off, but now it's following through. Not much happening here. You can see not much up really big or down. CVI is the other one that I was looking at, but it's trading near the lows here. So definitely don't want to try to trade that here. Now, there is one thing you can do. Well, if you are trading a stock down, sometimes I will trade near the danger point, but usually it has to be turning back up. So you see, like right here, it's just starting to turn back up on the 5 minute. I usually just know that because I watch how the stock is trading. But right here, I don't want it to take out this low. So just a concept, is that if you have a stop, like I'm okay with buying a stock, anticipating. If you want to try to anticipate, if you want, it generally isn't a good idea. And this type of market, it's usually a horrible idea to try to anticipate anything. But and you don't usually have to, waiting for the stock to pivot. But if you were, and if you did want to buy a stock on a pullback, at least here you're really close to this low, that should hold. You want this to hold inside. That's the key is to have this hold inside, because now if it takes out this low, then to break out today, it's got to have an outside day. It's just getting more and more ominous as it comes down and takes out these lows, and you're widening. You're not tightening, right? We want it to stay tight. Want the volume to stay quiet. So buying it right here, you could calculate right from here down to this low. You're just a couple percent, maybe one and a half, 2%. So it is, if you get it right, and this starts turning up here, maybe the market's down today, it starts turning up, and this stock ends up pivoting or even stays inside, closing the upper end of its range, stays inside. If you're at a 3 or 4% profit, 2, 3, 4% profit today, and then it breaks out the next day, you can maybe add to it. You're coming in with a very, very low risk. So if you are going to anything that you trade, just always try to trade from the lowest risk possible entry that the chart and the math come together. That's what we call backing into risk. Backing into risk, trading near the danger point. But that doesn't mean that you're going to go and buy a stock in a nosedive and bottom fish some stock that has giant overhead supply. You want to put these techniques. Everything should be stacked upon. Like I said in the during the program, everything that I talked about previous, everything builds on that. It doesn't erase any of that, and you still have to have all that previous the previous criteria. So you have to put this in context, of course. If you're in the uptrend, you've got the VCP. Again, that's when you're gonna want to try these tactics that I'm telling you. They're not just blanket tactics that you can use anywhere.
Question, Mark. You mentioned, you're out of the market, you have the profits for the year, it's all locked up. Common question being asked: when, at what point do you do that? What if you made $10,000 today? Is tomorrow your account $10,000 higher? Do you recognize that profit is now yours, so to speak.
I don't understand what that means. If I need 10,000, I mean, if I need to take money out of the
No,
account.
no, if you made $10,000 today,
Oh,
is
yeah.
tomorrow's, is that still profit? Tomorrow, are you resetting your, position sizing and
Oh, well, yeah. Well, the position sizing, I'm not sure if you want to adjust it that quickly. If you just, if you had, let's say, $100,000 account and then it went up 10%, I mean, it's not going to matter a whole lot if you move your position size up by another 10%. But yeah, if the count grows, let's just say you have 100,000 and now it goes to 150. Well, yeah, your position sizing on 150 now. Otherwise, you wouldn't compound. So yes, you're now you could maybe have some rules of thumb where, um, I used to advise newbies to not really position size bigger or to take much more risk until they can double their account, or at least get their account up 50%. Until you can do that, keep the position sizing maybe constant with that original number. But again, it's more of a personal choice. But there is mathematics behind it. If you don't compound, then yeah, you're not going to take advantage of growing your money. So you do have to compound. You have to increase your position sizing with the growth.
when you are coming from a cash position and you start, with a much smaller than normal full size position, even though you have full size on your chart, your screens there, that doesn't necessarily mean you're trading immediately from the start at full, what would ultimately be your full size 25% position, correct?
In this particular instance right here, this is just what this says full and half is just what we put on the platform. My personal position size would be in shares and would be tabulated separately. So this is just what we have on our MPA platform right now. Like I said, I went flat because of this seminar, and even then, I only had in the stocks that I own, I only ENPH a few of these names, but I'm very small in them. So, but the answer is that these are actual, full positions. We don't have a position sizing as far as like a model portfolio, but if we don't say half position or quarter position, then it by default it means like a full position. But again, the only position sizing with our platform isn't for actual position sizing purposes to say take X amount of size. It's to show a relative to whatever your full position is, that we're saying, hey, maybe this is coming from a low cheat, and we're recommending a quarter position here because there's a lot of overhead supply, and then we think we can maybe add to it down the road if it rebuilds and sets up a cheat or a handle. And stocks that we would maybe move more incrementally in, we would start smaller. Or if the market is just not acting very well, but we're getting some setups, but we have no traction, then we might, also tiptoe a little bit and come in with quarter positions. But
If
go ahead.
In the reverse sense of your progressive exposure, if you do have a loss or two or three, and you started at to 6.25%, how much would you keep dropping it with each subsequent loss down to? What's the smallest amount you would go to?
Again, it's going to be, once you cut it in half a few times, it's going to be negligible. So I would, and Mark, this is a good question for you too. I tend to just sort of, if things aren't working, I usually cut my trading back at least in half. And then if it's still not working, I cut it back in half again. And like I said, if you start off with a 10% position and you cut it to 5, then 2.5, you're trading, at negligible levels. You only have to cut it in half a few times, and then you're basically not trading. It's just purely, a token trade to keep your finger on the pulse, if you will. So I would say, general rule of thumb though is, cut your trading back in half of the size. You're taking $100,000 position sizes. A few stocks aren't working, things are moving against you. All right, maybe take cut it in half to 50,000. Those aren't working, 25,000, 12,000, and just keep cutting it back until it's so small that maybe you just stop trading. And again, if I were to lose a couple iterations, I go in there and take a few trades, they don't work. I take a few more, they don't work. I take a few more, they don't work. right there, I'm probably going to just stop. I'm going to stop trading, and then I'm going to watch some trades for a while and wait to see. That's going to be enough evidence, and I'll probably see on my watch list and the names that I'm watching. There's going to be everything's going to start failing because again, I have good techniques. We're starting to move up here with this. I'm just going to buy 1,000 shares here.
Order filled.
So I just bought 1,000 shares of LNY, and I'll give it a little room here and see what happens, see how it acts here, see if it can break out. All right, so I bought 1,000 shares ALNY. My stop now, again, I didn't tell you a stop, but I already know in my head my maximum that I'm going to give this thing is the low of the day right now. I've already made that decision. I maybe should have told you that ahead of time, but low of the day is where I'm drawing the line in the sand right now. Now it depends. Let me see how it acts here. And the more it goes up today, the more that low of the day would be something that I would want to enforce. I mean, if this does this today, and just blast off, well, now a full reversal and coming all the way back down would be pretty ominous. But I don't want to risk much on this. So I'm going to just try to get it right here. Let's hope that this just moves right from here. But I like the way, you see, it came out and then it pulled in a little bit and it didn't reverse much. It stayed strong. And now it's starting to follow through a bit. So you can see a little bit of volume coming in here. That might be some of you, buying this too, and we might be pushing it a little bit, but we're not going to have much of an effect. I can tell you that, and we're certainly not going to be able to hold it up. So we'll see what happens here.
That's just a good example too, Mark, where you draw the line.
Is that you? Is that you muscling? Are you?
No, that is not me. That is not me.
block?
No, I was just going to say it's a good example though. Of, if you draw the line on this one, you're taking out a good chunk of the supply, like we showed, in over the last 2 weekends. And this stock is, making the turn here. It should, there's not much supply if you look left.
Yeah. This looks really good. I mean, this is really set up quite nicely. Biotech's, the biotech group was really looking really promising for a while, but it's been fragmented. There's not a lot of stocks that are working well, even though you got a lot of stocks that are blast off, but there's still a lot of volatility. They're not coming out of bases really well. Even a lot of the power plays have failed. So we're in a bear market, and it's just a difficult environment for any group at this point. So until we can get better action, and we could get an indication that maybe we've morphed into a new bull market here, you just got to be prepared for a lot of these stocks are going to fail. O'Neill has in his book, I forget what page it is, it says a loud warning to the wise. You should read that. And it basically says that, with the in a bear market, all this stuff, coupled with handles and pivot points and everything, don't work, or don't work a lot less of the time, and you're going to have difficulty. It's not that it doesn't work, it's just not the right time. And that's where it's so important to use progressive exposure and to realize that there's times where you need to be in cash, and you need to be sitting on the sidelines. And we come in and we take these test positions, and once we get that traction, I can assure you, if we're going into a new bull market, it's going to last for a while. So you don't have to ring a bell and get fully invested in the first day of a follow through day. Or now some of the better names might take off even before the market makes its final low. And that's why you want to incrementally entertain some ideas early on. And then as things pick up and things improve, you can add some names. So this is acting pretty good. See, again, came up a bit here, and it's holding up. So I like the way this is acting so far. How it acts on the breakouts really important in the subsequent days. That's why we went over the violations and the confirmations. Those first few days are really important to watch. How it acts during the day. And I should point out, the confirmations and violations, you could watch a 5-minute and you want to see the same exact thing. So far here, we've got, since you came out of this little base right here on the 5-minute, this intraday this morning, you've got 1, 2, 3, 4, looks like 5 out of 7 days, 5 out of 8 days up, or 5 bars, if you will. 1, 2, 3, 4 good closes. So the same exact thing you'd want to see on the intraday if you're shorter term oriented, or you want to get an indication how it's acting from the breakout. You could take a look at the 5 minute and apply those same confirmations and violations. I generally don't look at the 5 minutes, so this I have this up for you guys, but I usually just have my weekly up here and not even looking at the 5 minute unless in pre-market, just to see what's happening with the stocks. You can see the market's turned down here a bit. So we're yeah, not much though. We're just sort of pretty tight range here today in the general market. TH is moving up a bit more now, up 7% or so. So that's the only star performer here so far. The GII stalled out and hasn't been able to really follow through much. That's what I kind of suspected would happen here. Yeah, not much. You can see it just really sort of a flat market. HP, the energy are coming off here. So we're looks like we're going to get a bit more pullback here on the XLE, and then these individual stocks in that group, I would look to those. You can see like HP got a big base here, forming this right side. I know Oxy is also got a big base. See, so you need more tightness here. See how it got tight right here, but then now it's leaking off, and so it needs more time. They're just not ready. But you got nice big bases here. So you may get another move in these energy names, but it just doesn't look like they're price ready just yet.
Question, thoughts on VWAP? One question, somebody's asking if that's what you're using there on the 5 minute, as well as ATR.
Yeah, I don't use ATR and VWAP. I did stick a VWAP on here at the behest of my, if that's even the right word, of a friend of mine who we were talking about VWAP and just talking about it intraday. I put it on. I didn't take it off, but I don't even look. VWAP means nothing to me. It means absolutely. And I know a lot of people use VWAP. I think it's probably the most overrated, useless indicator, if you want to call it that, or reading that you can use. But again, if it works for you, if you have a way of making it work, absolutely, you should use whatever works. Arch Crawford used to use follow the stars and use astrology. If that works for him, God bless him. I don't know how to use VWAP to make it work for me as far as adding, being a creative and adding any value to what I do. Again, like I said before, I try to break it down to what's necessary. Is it necessary for me to have this indicator or this other screen or what I want to take it down to the least amount of moving parts, to only what is absolutely necessary, and make the whole process as simple and straightforward as possible. That's really the key that you should be trying to accomplish with any strategy, is to bring it down to the and with anything. I've been in a lot of sports and over the years, and of course, I have a mindset book about performance. It's breaking it down to those things that are most important, and really breaking. If you break a baseball swing down or a golf swing down, that's what they say, to break down the swing, to break the swing down. You're trying to break it down to its individual parts, and then bring it down to the least amount of moving parts, and find out what's the most important, what influenced the outcome the most, and get rid of all that noise. Same thing with this, and if you've got the skill to read the charts and to understand the fundamentals, you don't need much. You don't need much. It's right there. Everything's right there for you. But there's a lot here. It may seem simple, but there's a lot here. There's a lot for someone who doesn't do this. This is like EKGs and looking at all these sine waves, and it is complex.
Vertex is being asked about, and BOX.
Yeah. So I've been watching Vertex for a while. It's just there's really no power here of it coming out. It's been a little bit volatile. I'm just not ready to buy this here yet. I would like to see it tighten up a bit more. I mean, you could have been buying it on Friday. Sure, I would maybe start a position there. What was the other one?
BOX. Box.
Yeah. Yeah. So this, a nice VCP. It's interesting. I didn't see this one. There's probably a lower relative strength. Let's see. Let's bring it up on MarketSmith. Usually when I don't see one, it's because, yeah, 85. So it's a lower RS. And that's the reason why I'm not seeing it. Weekly, this is really looks laggardish. It doesn't look like a leader to me. So in a bear market in particular, or a big correction, but in a bear market, I want to go with the higher RS. I want to be 89 and above. When you start getting 85 relative strength, you're in the laggard names, and I want to be in the leading names. So I love the VCP, and it's setting up really, really nice here. This is super tight. You can certainly play this, but it lacks the momentum. You want to try to trade where momentum is the strongest, because that's where you're going to get the faster moves, the velocity, and the trend is already in place. With this, you do have a little bit of overhead supply to the left. It's not too bad, but okay, so above here, you'd be buying it coming out above this level right here. It's pretty tight. We measure it here. Let's see. The peak to trough right here is about 4.8%, down here about 10%. So all your analysis is correct here. It's just in context, it's not in a strong stage 2 uptrend, or even really in a stage 2 uptrend, confirmed. And it's a low RS. So I would put it, this would not make my cut. And it may take off. This may take off and be a big winner. I may be buying it higher. I may be buying it 100% up from here. But again, I'm not really concerned where I'm buying it, how much it's gone up before I bought it. I'm concerned with how much it's going to go up after I buy it. I don't care if the stock goes up 1,000 points, as long as after it's trading at 1,000, it goes to 2,000, and it goes up from where I purchased it. So this is the boring and monotonous life of a stock trader. Right, Mark? We sit here and just watch and screen, and in a quiet day like today, I may be going through my screens, and but I'm just, if there's nothing setting up and there's nothing happening, then there's not much trading to do. So we're really just spectating and sitting back and watching. And I'll do post analysis, or get other things done, do house cleaning, we call it. Day like today, yeah, there's not much here. ADM is turning up a bit here now, so I'm going to zoom back in on that. So we came right down to that low. I like the way ADM's acting here, just from my own experience. With this type of action, it would be great to see it one more day and go inside and come out, but it could certainly come out today. This were to move above this level right here, I'd say you can buy this one. Again, just setting a stop down at this low right here would only be in the 4 or 5% range. So from a swing trade basis, that's pretty reasonable. And if you wanted to get really tight and set it below this little pivot right here, that's even a lot tighter, around that 93.84. And if you want to be a total stickler and it just has to go immediately and that's it, you could use the low of the day. Those would be sort of the 3 stops, and you can stagger it even. You can sell maybe some if it hits the low of the day, it pivots, it hits the low of the day, you take a third off, if it gets below the pivot, and a third off here. And now, which doesn't, again, I want to point out this though, it doesn't make much sense to do thirds if you're staggering and you're putting a stop at 2, 4, and 6, because now essentially you're getting the same middle price. So sometimes it's better to just keep the 2 prices, and you'll give more room on half the position instead of getting knocked out of 2/3, if that makes sense. This is one that I've been watching for a number of days here, and been waiting for it to turn up and pivot to buy. Let's go back to ALNY. Yeah, so this is squatting in a bit here. So again, this is not what I want to see, but this is normal. This is normal. It is pulling back here. And again, you can look at the intraday. If this was daily, and this broke out on a daily, would this be normal or abnormal? This would be normal. This is not acting. This looks like just a natural reaction right now intraday. If we can get back into new high ground here, then you'd have tennis ball action and it's acting perfectly fine. So like I said, the intraday is just as valid as far as confirmations and violations. It's pulling back a little bit here. So far this is normal. I don't like the fact that I'm down. Well, I was down about 1,300. Now I'm down 800. I don't like the fact that I'm negative, but it's still within the confines of acting normal. This is one too that, I might be willing, if this could move to new high ground now, let's just say, we turn up here and we take out the highs. It's still within the range, if it's still within, say, 1% above the breakout, and I've moved in a little bit, but it hasn't yet gotten past that pivot point by more than 1%, and it takes out the highs, and now we're maybe coming in around that 1%. I might add to it. That's where, because it's confirming, it's acting well, it's pulled back, it's squatted intraday, and it's able to recover. So now again, in that direction, I'm going to buy a little more at a higher price, not a much higher price, a little bit higher, but I'm getting that confirmation. Why would I want to add? The stock, I buy it tries to break out, starts pulling back. Why would I want to add and it coming in on me? It's not confirming. It's not going in the direction that I expected. So I'm adding to a stock that I'm wrong on at that particular point. So I'm always adding at a higher price. 99% of the time, adding at a higher price. Let's see. Mark, did you buy this too? Did you buy some of this?
ALNY, no, I did not buy this.
Okay. Let's see, what time is it? So it's 10:17. I think Scott's coming around 11 or 11:30. So maybe we'll get a lull, and usually around lunchtime, market stays kind of quiet. And we'll go over Market Smith. Bob, let's get to some questions, and also,
Yep.
I'll probably pull up at some point. Usually on this live trading day, I go back to the workbook, and so that daily routine slide. But I kind of went over that already. I pretty much went over that. There's a couple things in there that I leave out and I skip, and then I go over it. If we have enough time, we'll do that. But I can tell you right now, it's not material stuff. It's you're seeing it anyway. But we can go back to that. Any questions that we want to go over? With regard to what we're talking about here.
CPRX is another name.
Okay. Again, this live trading, we're dependent on the market conditions. It's only on one day, so we can't force the trade setups. Sometimes there's setups where some years where we had some nice setups and they just blasted off and things were running really good. It was some years we had some good intraday setups, and a couple of years where we had nothing. It was quite boring. So this is one that is also one that I've been watching. It's a bit sloppy here. This is one that I was pointing out to our members over here on 11/7. And I think that was the spot at which, you could have bought this from that cheat area. Now it's setting up pretty good, but I want to see if it can hold, maybe tighten up a bit here. If it can tighten up a little bit more, maybe buy this coming above, started above that 16-ish level, and then add to it if you can reversal recovery. But I still think this is a little bit erratic here. But it is one that I'm keeping an eye on. It's right here on my watch list, as you can see. This is sort of hierarchy, like the focus lists are the ones that I think can be set up this week. They're either set up already or they are close enough where they could be set up any day. The on deck are just a little bit, for whatever reason, maybe a little bit further, and they're not in my immediate focus. And the watch are some names that I'm keeping that I just want to keep an eye on. Something like the GFF, which broke out, is now pulling back here. With this breakout here, this would be an instance where I might be willing, particularly in a really good market, in a really great market, which you might not even get this chance. In a really great market, they break out and usually they follow through the next day, a couple of days. But I might buy this pullback, back to the breakout level. If you can get back to this breakout level and we start turning back up, you could maybe come in and then you'd accomplish buying it the same price as the breakout on Friday. So that's one that I've been watching. I'll move that over here to keep an eye on that. My main list, but not a whole lot going on, as you can see here. What else, Bob? Any other questions?
Pulling up
Any other
EDU.
questions as far as beyond just stocks?
Oh yeah. Yeah. Well, a lot of it's from the workbook as well. Do have some questions there lingering. People were asking, Mark Ritchie had made a reference a couple of times of using the same 3 screens, that he's been using for 12 years. What are they, or how do they differ from what Mark's screens are?
Yeah, I don't think they're gonna, like Mark was saying, there's a lot of overlap, so they're not gonna differ in terms of what the names we're looking at. But yeah, I can give you those real quick. So the 190, I run the top relative strength, top 3%, 97 to 99 relative strength. Only qualifiers on that are basically just the share price and volume. So nothing fancy there. I just eliminate the really low priced or really low volume stuff.
Right, so same, just RS, but
Yep.
he's 97 to 99, the highest RS. Those are usually the power plays. You'll put a price cutoff. I put a percentage off that's high, and then a minimum share volume and no ETFs. So it's essentially the same thing. Mark's saying.
Same thing. Yeah, the other one, I run a high composite. I think the composite ranking, 85 or higher that Market Smith has, and then I just removed the top 3 highest RS from that group because I've already seen them all. I run that, and then I run an IPO screen. Basically,
Here's your composite screen. I just want to show you real quickly. This I have set at 68 to 99. And you can see there's a few other things here that I added. I added no more than 10% below the 50-day and 7% below the 21-day. You can put this in your screening. The reason why is that when you get to the load sheets, sometimes you'll be below the 50-day. And you can buy a stock below the 50 as long as it's not. I used to use 8% as a cutoff. I've raised it to 10 because I like to get a heads up. And so if it's below 10% below the 50-day, you can still buy it, but usually those are buying from the cheat and the low cheat area. And I also found the 20 or the 21-day. You don't want it to be too below that as well. So this adds a few more parameters to keep them in the shorter term, intermediate term uptrends, if you will. Percentage off the high above the 200-day, at least above the 200-day. So I just added a few other criteria in here. An RS 89 to 99 with the comp rating. So this is sort of what Mark's saying, except I added some additional criteria here. But go ahead, Mark. I just wanted to kind of show the similarities between the screens. You're not showing your exact screens, but yours are even more simplistic.
yeah, they're pretty bare bones. And then I mentioned the IPO screen is same idea. I just anything that's IPO'd in the last 2-3 years, RS of 70 or higher.
Yeah, so mine is right now I'm running it to 2021 on current price and RS 25 or higher. But again, pretty much the same, just looking at all the IPOs and then sorting them in as IPO date. So, if you just run the trend templates, and if you don't have Market Smith, you just run high RS IPOs, you're going to see pretty much every stock that you're going to want to see. You're going to see the stocks in an uptrend that have the relative strength. And then from there, you've got to start looking at the chart and at the fundamentals and going through what we have, what I went through in the workbooks, categorizing the company, decide what kind of company is it. And that's what's going to put the earnings, the fundamental picture into perspective. Turnaround situation, you want to see big earnings in the recent quarters, right? Biotech, you don't really need earnings, but you're going to want to see a super strong chart, usually power plays and the charts that are really strong. Cyclicals have inverse PE cycles and earnings. And, I laid all that out for you as far as categorizing and then looking at the earnings, sales, and margins, looking for the acceleration, and putting all this together manually. Because again, you can run all these different screens. I got a bunch of different screens. I fool around with these all the time. But if I run all these screens, you're going to get the same names. You're just going to get a narrower list or a bigger list. Now, if I start taking stocks that are in downtrends too, and stocks that are 50% off their highs, yeah, then I'm looking at the whole market. I'm not willing to buy those. I'm narrowing it down to the stocks that are in an uptrend, trading within a certain percentage of their 52-week highs, and that is my universe. So again, we're going to get Mark and I are looking at the exact same names. Each morning, we compare lists, and we're almost identical within one or two names.
Got a lot of questions. Actually, quick reference. I'm sorry. IMGO.
IMGO.
Yeah, being acquired by Merck today, it's up 100%, but that's not going to become a power play likely when you have a buyout, right?
That's an acquisition or a buyout, proposed merger. Yeah, we're not going to mess with that.
A lot of questions we're asking about gaps, how you handle your stops.
LNY is moving up here, so hold on. Just we're up 2%. Okay, I got a little bit of a profit here now on my position. So far acting good. I like the way this is acting. So you see here, it's looking like a natural reaction. So the same thing that we would look on the daily chart. We want to see, we had a couple bars down. It's 1, 2, 3, 4. I'd like to see this get back into new highs in less bars than it took to get down. And again, I want to make sure I point out that I do not look at this. Like, this is not how I gauge. I watch the stock and I just watch the daily. I don't even really use this, but I am for you right now. If you want to look at it this way, that's fine. To get granular, this is the way. If I were to use an intraday chart, I would use a 5-minute and I would just look at it, look at from the breakout and just see how it's acting. But this could throw you off too, because what will happen is you could get it to break down and act abnormal, but it's still on the daily. It's fine. And you're going to see all this, what looks ominous on the short-term intraday, but it still hasn't even gotten down to maybe it's mid of its daily range. So you got to be really careful when you get on these shorter term timeframes. They can become very emotional, and you're now getting so myopic that you're missing the big picture. That's why I tend to just, watch the daily, set my stop, and stay in there until it hits my stop, and look for the confirmations, violations on the daily chart. That's the time frame I would recommend you trade from. But for today's purposes and showing you that this is timeless, and be able to read this and get more activity, we're going to look at this 5-minute. Let's see what happens here.
So questions were a bunch of people asking about how you handle gaps through your stops. If there's anything that you could do to avoid them, if there are any hints of them. One person has had 4 gaps in the last month of 10% or more alone. So he's been getting really beaten up badly.
I'd like to see those 4. Well, I'd be curious to see if you're sticking to sound rules, or if there's something that you're doing that's putting you in a position to have stocks that gap down big, whether you're in downtrends or buying into supply. There's nothing you can do about it. There's no way you can know if a stock is going to gap. So the only thing you can do is position size. That's really the bottom line, is position sizing. There is a chance that a stock could gap down huge on you. It's very rare. I mean, I've been doing this for 40 years, and to have a gap that really hurt me, and with any type of size, I've never had one really put any kind of big dent in me because of position sizing. But I've had a couple big ones that were definitely were painful. But yeah, I would say in 40 years I can count them on 1 or 2 hands. So I don't know. How about you, Mark? I mean, as far as big gaps against you?
I've had a few, nothing though. I think the worst gap I ever had, I think a stock gap down 40% maybe, but it was a really small position. Still not fun. My rule is it goes through your stop, you get out, you take the next best price you can. I will on occasion, let's say my stop is at 100, and the stock gaps to 99, I might give it the low of the first minute or two, but even that's with the understanding though that I am getting out.
Yeah. I was just having a conversation with my wife the other night about we were just talking about estate planning, and my daughter's going to be 17 soon, and we were concerned what happens if something happens to us together, we're in a plane crash or something, we got to figure out exactly how we're going to, have our wealth distributed and so forth. But I told her, I said, if anything ever happens to me, I want you to make sure you never, ever put any more than 25% of our money in any one area, so it's sort of the same 25% position sizing. I told my wife about our entire wealth, because again, even if, let's just say, it went to zero, you put money with, who knows, someone's managing